What's up, everybody? In this video, we're going to be talking about the inverted head and shoulders, which is a bullish pattern. It is our second to last bullish pattern we're going to be talking about in this bullish, in our top bullish pattern series. So what the inverted head and shoulders is basically an inverse, and it's the opposite of a normal head and shoulders. Everybody knows, most people know about the normal head and shoulders. You have a left shoulder, you have a head, you come back to a right shoulder, you have a neckline, and once said neckline is broken to the downside, you have a measured move here, which goes down to, which measures out to how far down this is going to move with the break of the normal head and shoulders. So with the inverse head and shoulders, as you see here, it is one of the highest percentage win rates, meaning that when you break this neckline at an 83% clip, you are going to have a follow through 83% of the time, typically, to the upside, and I think it's going to go in your favor. And so, if you have already seen it on the chart, we haven't drawn it up yet, but as you can most likely see, we have an inverse head and shoulders here on square. And this is a trade we're actually actively in right now due to the reasons I'm about to show you. So we drew our left shoulder, our right shoulder, and our head. And then what I typically like to do as well is draw the a little box, because it's never going to be perfect. This neckline, like you see here, it's never going to be perfect like that typically. So like I would like to do typically is draw take a box, take it from the high, pull it down, draw it sideways, and that is your neckline. And it's more of a box rather than just a singular line. That way it gives you some buffer room. And as you see right here, we had said breakout. Not only said breakout, but we are currently having a retest of the breakout. And why I'm in this trade is because we're retesting right now. And I strongly believe, based on the high five setup, the high five trading strategy, and my other strategies, Williams consolidation box strategy, we're going to continue higher on square. So my trade is all about square going higher. And as you see, we have the inverse head and shoulders. Now that we know how to draw the inverse head and shoulders, and just to practice it at home, it's just going to be going through charts and trying to identify head and shoulders, inverse head and shoulders. And the more you are able to depict them and practice them, the more you're going to be able to chart them and see them very clearly and quickly when you're moving through a chart. So to figure out the measured move of the inverse head and shoulders pattern, you're going to take the price range. You're going to lock in on the magnet here on TradingView. You're going to take this from the low to the high. You're going to drag it, drop it to the breakout, and that is going to be your measured move. And it's funny that the measured move also aligns with previous resistance. So once we hit this measured move and our profit target here, I will be very sure to be taking my profits like I always do, but even more so because we have resistance in the past. So now that we have our measured move, the only other thing we really need to do here is get our measured timeline. And our measured timeline is essentially taking this time frame tool, dragging it from the entrance into the left shoulder until the breakout of the right shoulder in the neckline, copying, pasting, dragging over, and drawing a vertical line, giving us our time frame of July 5th, 2027. And like I always say, this is just a gauge to understand when this will happen before, just to let you understand how to play options or X, Y, or Z. But typically these things take longer to build out. But once they break out, they get to their point in a very, very short amount of time, typically. A lot shorter a time frame, typically half the time frame or less to be able to get to the measured move. So just understand that. But yeah, just to repeat, you have a left shoulder, you have a head, you have a right shoulder, and basically what you really need to see in here in order to have this is you need to have a break through the neck. You don't even know it's a neck at this point. You come down, you come back to that neck. So now you touched it twice. Then you come down further, come back to that neck again, and then you come down about the same distance as the left shoulder on the right shoulder and come back to the neck. And once you do this, then break out through the neckline, we have a breakout of the inverse head and shoulders, which 83% of the time is going to be a continuation higher and a winning trade. And then when 60-70% of the time we get a pullback, typically on breakout 60-70% of the time, to retest said breakout area to make it resistance and flip it into support and move higher. So for a trade, you would enter at the breakout, you would add at a retest, and you'd put your stop loss probably about halfway down on the inverse head and shoulders. And then obviously you have your profit targets that you're going to attack, like here. And then you could ride the rest out until your strategy goes against you. And that is the inverse head and shoulders. That's how you chart it. That's how you trade it. And yeah, hope you enjoyed. I'll catch you in the next one.